Good morning and welcome back to the Opportunistic Trader for November 1st, a new month and new hope that the market can rally. For all the people out there, if they think the flip of the calendar, the market can rally. So there's new hope for this morning. Market is up about $10 on the S&P. Markets across the board were slightly higher. Asia mixed. Nikkei was down a bit, cash, and China up small, and Hang Seng up small. And out of Europe, it's been mixed up and down, and now trading a little bit higher. I saw some comments out of the East, out of the Bank of England, basically saying that growth may be slowing and inflation tame. So it's not really having a big impact on those indices, but that has come out, and we're watching that. And overall, the markets are trying to hold in. They're about 100 handles off of that low made on Monday. Do think that we're going to get down there. Obviously, the big play today is the Apple earnings, and we have to just be leery of that. They're always good, so we're expecting it to be good. I don't know what the stock reaction will be. We'll have to see on that. But overall, that's sort of the story. Yesterday was an interesting day. As you guys and Mike was sitting with me yesterday, we were getting calls from maniac people out there saying there was 90 billion to buy, 50 billion to buy, 30 billion to buy, and there was nothing to buy. But it ramped the market 40 or 50. Actually, I think we were up 50. We ended up 20. Sold off late when the market actually had sellers. There are net sellers in the market and outflows. So it'll be interesting to see, how today goes. I don't know if I think Vince was just discussing gold, but oil's the really interesting one because no one's really talking about it, and it's down about 20% from the high, with no bid, and the market in the stocks rallied almost 1,000 Dow points, and oil closed on the dead low of the month and traded even lower. So that's something to keep an eye on. I think Adam mentioned that positions flip to the short side from the long side, which is surprising after something drops 15 or 20%, but they've been pressing the short there. Keep an eye on that. Overall, volatility is in. I think volatility is around 20 and a half, down from 28 on Monday. No respect. The discount still exists in December, where you have almost a 17 volatility. So they're pricing in nothing as far as fear goes, and the markets are tight. With that. Overall, Mike, do you have the straddle up?
I'm pulling that up this second. Here.
Okay.
Yeah.
The straddle with 2 days
is for 2 days. It's a 30. Let's call it $34 bid.
Right. You have non-farm and Apple, and it's $34 bid. I'll just give you on Monday. I'm sorry, not on Monday. On Tuesday into Wednesday, the straddle was $50. So straddles are in half. The market is, feeling okay, feeling a little giddy. Everybody is back again bullish. I've been reading commentary, and every single person is bullish. That was it. Again, the 10% correction exactly, and then a ramp up, get the 10% back in a week, and everything's fine, and no one has to sell. We don't think that that's the case, but we're going to have to. The market will dictate that to us, so we'll stay leery of that, and we'll go from there. Thoughts in general. I think crude is a buy. We're going to look to buy that today. I'm not understanding. I think the market is a short, but we're a little wounded from our trading yesterday. We actually would have had all winners yesterday, but at about 3:15, I just couldn't take it anymore, and I just covered all the positions. So, can you guys hear me? Okay.
Yep.
Yes, sir. Yes, sir.
Okay.
Now, are you watching TV or are those human beings behind you, Larry?
Oh, there are people behind me?
Well, I hear other voices. Just wondering if you have people hear you or if you're watching TV.
Oh, I'm actually, no, I'm stuck in a car traveling, and
Understood.
there are people chatting in the back.
Well, please travel safely and our best to your
So what I'm going to do
Vince
is
is actually on the trading floor right now. That's people
exactly.
in the background on the trading floor.
They're trading behind me.
It sounds like they're trading shoes, Larry.
They're trading shoes and bags, not stocks.
Larry, can I make a comment about oil? Because I actually touched on it in the gold fix, and I think it is, if not the answer key, it is something to pay attention to and might give you some solace. If you look at oil as a risk-on tool, and macro funds that are long stocks are usually long oil, that made sense that oil sold off. Absent fundamentals, okay, and absent seasonal drivers, oil will go up and down with stocks, regardless of the dollar, because it's a risk-on tool. However, to your point, stocks have rallied and bounced off the lows, and oil doesn't care. And it is my contention that absent fundamentals and absent seasonality aspects, and when you are long stocks, as you know, and you have, say, you're a macro stock trader, and you got a little oil position, you're going to sell the oil position to support your stock position. And so funds are liquidating their longs in oil, and they're continuing to liquidate their longs in oil because the dollar has been strong and it finally caught up to oil. Oil only defaults to dollar strength when there's nothing else to give it a reason to go higher. And I just think the dollar strength, with today as an exception, has been a driver because there's nothing else to take its cue off of other than stocks, which have rallied, but managers are now continuing to puke oil as they shore up their stock positions.
But let me ask you a question on that thought, though.
Yeah.
So you have an oversold market in the sense of oil being down about, 77 was the high. It's trading at, I think it traded 64 and some change.
Right.
My question to you is, it's an oversold commodity,
right?
Okay? Which, listen, it still could be more oversold. You never know. It's an oversold commodity, but now today the dollar is actually weaker.
Yes.
Across the board, and the market has no bid. So
okay, that's a good point, and I have an answer for you. It's an observation, and I'm dealing with conditional probabilities here. The dollar is weaker, and oil is not up. First, to address that directly, if the dollar weren't weaker, oil might be down more, but we don't know, right? We can't prove I'm right or wrong on that comment, but I can say this. When the dollar was rallying and every other industrial commodity in the world was selling off, oil didn't care. So it took 6 months almost, well, let's just call it 3 months, for oil to pay attention to the dollar, and it only paid attention to the dollar's rally after nothing else was bullish about oil. And the fund manager said, well, I guess we'll look at the dollar because nothing else matters, and we have to shore up our equity positions. I don't want to put too much emphasis on the oil-dollar relationship as a short-term driver. I do want to emphasize it as a long-term excuse for fund longs to get out when they're trying to shore up their other risk-on positions. Does that make sense?
Yeah, makes sense. Makes sense, but
I'm not going to buy oil because the dollar's down. I'm not going to sell oil because the dollar's up. But if I'm a fund manager who's getting whipped by stocks, and I need to pull in the reins on my ancillary positions, I'm going to sell everything else I have. I'm going to mortgage the furniture to keep my stock positions in place and get ready for redemption. You, as an active hedge fund manager, can speak more to that, I think, tactically, if I'm right or wrong. My comments are based on my own positions, the fund that I did run as a sub fund, and macro guys that I talked to yesterday. I would defer to your experience, though, if I'm, blowing smoke up my own behind.
No, I think you're right. I mean, for me, the way that we trade is, this is being reverted way outside the box. Thank God that we really haven't been trading it much to the long side at all. I'd like to trade it from the long side at these levels for a bounce, but overall, the mean it's outside the bands of the mean reversion.
Okay, and I know how you play that, and I'm learning more every day on that. And I want to throw this at you, not as a challenge, but I think for people who want to understand your perspective versus my perspective in this conversation. I say to you, yeah, it's not outside the mean reversion. It's just reverting to the mean because oil should have been lower 3 months ago and stayed lower. But I'm not married to that. Now, on the short-term mean reversion, yeah, I agree with you. Oil's oversold, and it should be tracking stocks higher again, and it's not. And I think that's mechanical with fund liquidation. And I think you're going to have, if stocks maintain this level, in the next quarter, oil will have the funds get back in buying. And I will cite Bryn Kelly, team expert and oil fundamentalist and options person, who said a couple of days ago that made me really pay attention. In this liquidation of fund managers selling oil and in this sell-off, I do not see the bid for puts that I normally do. And to her, I think, and to me, I know that means that's not producers hedging, because producers buy puts when they sell oil. That's longs getting out, and no one's bearish oil. They're just liquidating long. And as a person who understands volatility the way you do, that should speak volumes, because oil is a put skew market, and they're not buying puts on the way down. I think that might be a reason to get long when the dust settles.
Yeah, I mean, I agree. I just think overall these markets are, they overshoot. And from what I'm gathering from the COT data and even from Tracy, that the traders and hedge fund managers are actually short this market, not long. So they went.
Okay, well that flipped recently.
Right,
I'm not saying that's not true.
They wrote it down $10 to $12, and now they're all short. So
yeah. So now guess what? Then we might be setting up for what you want to happen. There's your catalyst.
Yeah, potentially. So that's sort of the markets here. I think the trade in oil is long. I think everybody's shorted. They pressed the mark yesterday. They bashed it down like in the last 15, 20 minutes, $1. Plus, it has not bounced. It actually went lower. The 65 area should hold in here, but again, we're not 100% on that. And then as far as equities, we're negative equities. This will be the third up day in a row. The market actually rallied almost 1,000 Dow points off the low that it made on Monday. We don't like these levels, but obviously Apple's earnings are coming, and we'll see. We'll see what ends up. We'll see what ends up happening as far as individual named equities. I don't see a lot out there, Mike. I don't know if there's anything standing out pre-market.
I'm just looking at it. Everything is green on my screen. Amazon is up 1.5%. Is probably one of the biggest gainers, which is back at 1620. But like you said, all eyes are going to be on Apple. Right now, though, sector performance, it's nothing that stands out. The S&P is actually only up 6.5 now. So we were trading 27.25 is the high. Now we're trading 17.5. The VIX is trading 2077. The one thing that stands out at me actually as we kind of approach this new month is, let's take a look at the fixed income world. Yesterday, the 1-year note traded 269, which is the highest level since 2008. And we get that with, we have ISM coming out today. We have non-farm payrolls tomorrow. So I get back to kind of what I mentioned yesterday a little bit. If people were attributing the beginning of this equity sell-off to yields, if we get good numbers both on ISM and on non-farm, that's going to probably push yields higher. It's not the 30-year so much. It's not the 10-year. The short end of the yield curve continues to move higher. That's something pretty interesting, especially with these key data points coming up. We have the dollar, which is actually weaker today, pretty strongly weaker. After bleeding up a little bit each day, the dollar index was just grinding up. The euro's actually up about a big figure here. We're up about 80 pips. And then the pound, Larry's favorite pound, we actually traded down to 126.80, and here we are. We're now at 129.20. So started to see some volatility there yesterday. A combination of two things: one, some positive Brexit news, and then two, this morning they've extended gains after the Bank of England came out, and I don't know. Their comments all seem pretty in line. They voted 9-0 on keeping rates where they are, and expecting as expected, leaving rates unchanged. But the pound has continued to move higher, so that's been a big mover. Aussie's up a big figure, so really it was bleeding higher. Dollar like 10 pips a day each day, and then about a big figure against it right here. Euros at 114 the figure. Dollar yen's at 112.80, so it'll be interesting to keep an eye on those things because the dollar's been trading higher for a number of days, as we've spoken about. As you guys already talked about, crude oil is down 25 cents here at 65.05. The range has been, we got down to 64.65. Gold yesterday started to break down. We traded down yesterday, I believe, below 12.15. I think we got below that today. Right now we're at 12.31, so $16 higher, and that's going with dollar weaker. But that's pretty interesting as well as we get back to the top end of that recent range in gold. We're not quite there yet, but in the ballpark. Vince, I guess I haven't heard. Do you have specific levels on gold that you could maybe talk to? Here we are at 12.31 with these key catalysts coming up over the next few days. Vince might have dropped off. What's happened to Vince?
Can you hear me, Mike?
Yeah, you are there.
No.
Oh.
I had muted myself. I apologize.
Well, listen, here's my story, guys. I am in motion. I will try to make it back onto the chat this morning. I'm going to try to make it back onto this call, but I may not. But I'll be live on the air before the opening to recap everything.
Larry, I have a comment and a question for you before you go.
Yes, sir.
The comment is, thank you for taking the time to do this on behalf of the subscribers to put this important, to keep this so high on your priorities as you're traveling. The second is more important. Could you please address the pit? Where are they on the Christian Louboutin Jimmy Choo spread?
I can't hear you.
Could you please ask the trading pit in the car, where are they on the Christian Louboutin Jimmy Choo spread? No, really, ask them. I want to hear them say, what does that mean?
The audience wants to know what your favorite shoes are.
No, that's just so legitimate. Louboutin.
All right, we'll check that.
Louboutin Jimmy Choo spread, please.
Let's let Larry run, and he'll be back on with us, and then Larry will still be on throughout the day.
All right, and everybody, good luck today, and I'll be on before the opening. Have a good one.
Awesome. All right. Travel safely. Be well.
So Vince,
thank you.
Yeah, thanks, Larry. So Vince, we were talking. So what are your thoughts on gold here specifically? What levels are you looking at? We got some key catalysts. We have ISM at 10, and then we have non-farm payrolls tomorrow. It looks like gold right now is kind of moving in lockstep with the weaker dollar right now on first day of the month snapback.
I'll give you a brief synopsis because I don't want to, because gold's just not very enticing for active traders. But I think it's a tell on what's happening in the trade wars. And here's what I'm getting at. Number one, do I have levels today? Well, during the gold fix and in the post I put up, I basically have no levels today to trade from a volatility perspective, which is no help. On a technical perspective, if you just go back a couple days, on Sunday, I said gold will not be at 1235. We're going to have a move. We had a single trip at 1232. The market dropped $20 from 1235 to 1215. And that signal had been negated last night. Now, as we rally, and this is interesting, this is very relevant for people watching U.S. stocks. We had discussed, you and I had discussed off air, and I discussed with listeners that the gold dollar yuan fix is important, or correlation is important now. And lo and behold, gold had rallied with a weak yuan, and then gold sold off. And now today you have the yuan tracking higher as the government is backing off of their weak yuan policy. So if you're trading day to day, week to week, as opposed to intraday, it's safe to be long if you believe, as I do, that China is going to back off easing monetary policy and do more tax refunds or tax easing, kind of like a QE concept. China is moving towards QE, which means they're going to boost the yuan, I believe, and sell bonds, I know, and reduce taxes, I know. Well, those are facts out there in the market. Gold otherwise is boring, except that it is in completely tracking the dollar. If you're bullish gold, sell the dollar. That's really what's going on.
Well, you know, it's interesting. I just brought up a chart of dollar CNH here, and it really shows dollar CNH almost is probably the best representation of the dollar index right now, where it bled higher, so dollar stronger, China weaker for the past 2 months, and you know, especially last month, very, very small. Like
Are you putting something up on that on the screen?
It's on the screen. Everybody can see.
Okay,
dollar
good. I want to make sure.
there, and yeah, it's just grinding up, and then
so I'm going to give you a question.
Euro's up a big figure here on the day, and you can
see
China's basically dollar CNH gave back about half of last month's gains in just overnight trading.
I think so. As an FX expert, I'm going to throw this back at you as an observation for you to chew on and think about other pairs and what you would do with it. Gold, just as an indicator of other things, not as something important to trade right now. Gold, for the last 5 years, has had its strongest relationship with the dollar yen pairing, as did the stock market actually. So, but when the trade wars started, right, we'll say in May, gold completely decoupled from the dollar yen and started tracking the yuan. And if you look at a gold yuan pairing going back actually to 2017, you'll see that China, and this is important, you know, for the FX market, which is important for stocks. You'll see that China was trying to get off of a pseudo dollar peg and onto a pseudo gold peg. There's a trend channel that started to trade between gold and the yuan, and recently it just broke down a couple of days ago, like 5-6 days ago. It just broke down 2 weeks ago, actually. It broke down, and the yuan continued to go lower while gold went higher. Now that reasserted itself. What does that really mean for everything else? It means that the Chinese change in tactics is bullish for their stock market, bullish for our stock market, and bearish for the dollar. As a risk on, risk off comment, as the yuan allows itself to strengthen, because you need a stronger yuan to encourage offshore investment. It's kind of like a liquidity thing. Are we supporting the yuan? Yes. Okay, well then we'll take a chance and buy it and buy Chinese stocks. A strong yuan rescues the Chinese stock market, so to speak, and it signals risk on. Aussie dollars probably going to strengthen. Commodity countries in general are going to strengthen, and that's going to come back, and you'll probably see the DAX up 1%, and that's just going to actually, you know, because we are the tallest stock market. When they drop 1%, we're unchanged. When they rally 1%, we could rally 2%. I think the yuan gives a signal as a big trading partner with the world to be a little bit more risk on, which I throw back to you as I see if that trend continues, you're going to see stocks higher globally again. And maybe it's a relief rally. I don't know. And I also think, to Larry's point, oil becomes a buy as soon as you see some sort of stochastic indicator or some sort of catalyst of too many shorts in the oil market. Oil becomes a buy.
Question for you, because I just want a concise answer on what you were just saying. You're saying that you think dollar is going to weaken China, mainly due to China, and you think that that's going to cause a bid in equities and almost a bid in gold and a bid in crude based off of that?
Well, factoring out, actually, I should address Europe. But before I do that, I want to say this. If China, as a signal to the world equity markets, and China is doing this right now, 2 of these 3 legs are being done. One, China has stated they will be issuing yuan-based bonds. That means they're issuing debt. That means they're no longer deleveraging. Two, China has announced that they will be looking to lower tax rates for corporations. Three, and this is what I'm seeing just one day, it's just one day, it's not a trend. The yuan was fixed at a stronger rate to the dollar. Now, forgetting the dollar for a second, the fact that China is going that route, which is QE, early indications, is a sign of risk on for global equity markets in and of itself. Now, focusing on the dollar, as do I think the dollar is going to go up or down? I don't know, but I certainly think that the dollar will weaken against the yuan. But Europe, is this a dead cat bounce? I don't see anything resolved in Europe, but everything may get dragged higher, including currencies against the dollar as we go risk on again. That's not concise, but I think it answers your question.
All right. Well, that's an interesting thought process there. More macro kind of thought process there. Yeah, it'll be interesting to keep an eye on. It's just, I think just, I'm not giving market direction, this and that. I think that if you're trading currencies and you're interested in the dollar, the main focus you got to keep an eye on is dollar CNH, because I think that's almost like a de facto dollar index now.
At least until the trade wars are resolved, which is a very big deal.
Absolutely. And so, it's interesting. Here we are, dollar, euros at 114. And the only thing I continue to point out, we have a lot of key catalysts always to start the months. We have ISM today at 10. We have non-farm payroll tomorrow. Right now, the market is still planning on a hike in December and 2 hikes next year. Even with all this market turbulence, and even with the president kind of bringing the Fed into the spotlight, that's still what's priced in. And even with this market volatility. So, and I don't think we're going to get a whole lot from the ISM or the non-farm payroll. Like yesterday, we got a good, steady ADP number. And when it comes down to it, I think we're going to get a steady number tomorrow as well. And that's the sort of thinking. That's why we're raising rates. And so,
yes, you have a Fed president who actually pays attention to the numbers, meaning he's going to look at inflation and things like that. He's not going to enable the market. The PAL put is not down 1%; it's down 15%.
Yeah, and look, they're raising rates not because there's one headline number that's great or bad. It's because we're on a huge trend here. Unemployment is trending lower. Job gains have been averaging in excess of about 200,000. I don't know about in excess, but in that ballpark of 190 to 220 for the past few. I want to call it almost 2 years now. So that's why they're raising rates. And so one number, like last month's number, I should say, was a bit of a disappointment, and that actually had some hurricane effect to it. And so, we'll wait to see this one. And then the numbers also start to get skewed because of part-time sort of as we get closer to the holidays, things like that.
Your comment
is the trend.
Yeah, your comment at the macro level, and also echoing that my comments were macro. I want to address active traders and bring right back to what we're doing because we're all active traders here. I like to look at macro ideas. I'll come up with a macro thesis, and then I'll look to see if my system supports it at a macro level, meaning weekly and monthly chart indicators on volatility. And when that happens, then I have my bias. And once I have my bias confirming my idea, once that bias is confirmed by an objective system, then I start looking for day trading, active trading indicators. So let's assume for the moment, and I don't, that my idea has been confirmed by my macro volatility levels. I would be biased, risk on. So I have active trading levels today in the ES, and those are above 27.28 or below 27.08, actually 27.28.36 and below 27.08.36 on the open after the first hour on an hourly bar. I will look to get long above on an hourly settlement or short below. It's not a black box, it's a brown box. The point is this: if I have a bias, I will be long twice as many on a breakout above than I would be short on the way down. And I think that this will play out if my macro idea shows its hand over the weekend in volatility charts. I think this will play out nicely in oil. If I'm right, oil will start to rally again. I don't see it yet, but today I'm looking at the actual S&P or ES for my levels, and there's going to be a swing trade today in the S&P. I think number one, bring it down to the micro. Gold, I got nothing. Sorry. Right. I mean, I got nothing today. I had it. You get your $20 move, you're done. Go back to bed. You can't trade it anymore. The Nasdaq, I got on the hourly basis after the first hour. It's it's going to give me a very good signal from a risk reward perspective. It's so tight, and I'll probably be stopped out, but it's something that you can trade above 70.14.5 or below. I'm sorry, wrong number. I have them on the wrong date. Above 70.14.80 and below 69.60.55. I'm going to get a level. Am I going to trade on that? You'll find out in the chat room. But those are levels. We're going to have another move, higher, lower. I don't know. But on the individual stock level, I mean, is there anything that you see at the individual stock level that interests you, other than the fact that we know we have to watch Apple very closely today? That would be my question to you.
No.
I have stuff in front of me. Just throw a name at me, and I'll let you know if we see anything.
No, yeah. Look, I'm looking at broader trends. The past few days, actually, financials have traded well. So I'm keeping an eye on that.
I was totally wrong about that.
And keep an eye on some big tech names. FANG has really been driving things. It was interesting. FANG has outperformed year to date. Right now, Apple is up 30% year to date. Netflix is up 60%. Amazon's up 38%. Microsoft's on FANG. But that's the picture. I mean, they're up big double digits. And then last week, when those had sharp reversals, that was, a big tell. And at the same time, there were a few days there where we had heavy tech underperformance, and actually financials traded pretty well. So that was a bit of a rotation day. The one thing I do want to point out, if everybody looks on their screen right now, there are two charts. There's the mini S&P 500, and then to the right of it is the VIX. And they're both 10-minute charts, 10-minute bars. This is something Larry pays very, very, very heavy attention to. So you can see here the inverse relationship. S&P over the past hour or so has come down from 27 and a quarter high, but let's call it even 27.25 down to here we are at 27.15. Whereas the VIX bottomed at the exact same time that the S&P peaked. And so these are the sort of inverse relationships that Larry looks for when the market opens. Not necessarily so much overnight, but when the market opens, he's heavily looking always at the VIX and seeing, as an example, if the VIX were to spike higher right now and the S&P doesn't move, he'll take that as a short-term sell signal in the S&P oftentimes. Or inversely, if the VIX were to reverse and start to move down, he would look to probably buy S&P, and looking at those sort of signals. And oftentimes those are the sort of tells that have been working pretty well lately on the very short term. So definitely keep a close eye on the VIX, and not so much the ETFs. It's tougher to see because a lot of these ETFs just don't work as well as the individual VIX index themselves. Larry could get into another time a whole segment on how the ETFs are broken products. So that's maybe coming next week. But keep a close eye on the VIX, especially in these volatile markets where the VIX over 20. That oftentimes has good tells, and I have those two charts up right now. But it's going to be an interesting day. We have Apple after the close. We have ISM coming up at 10. A lot on the radar. And today we have a very, very busy schedule. We have at 10 o'clock, we're going to have Tom McEntee coming in early at 10 a.m. talking about earnings. He's going to be obviously put up the Apple chart along with a few other names, looking for option opportunities there. At 11 o'clock, Bryn Kelly and Mike Korn, they've been joining us a few times over the past few weeks on Thursdays. So they're going to be breaking down the latest natural gas report and talking about natural gas, but really they're going to be talking about all things energy. They kind of just have a good conversation. And if you guys have questions, you can put them in the Q&A area, and they'll get to those as well. 12 o'clock, we have Dave Floyd of Aspen Trading, who's going to be coming on and talking technical analysis with us. And then at 1 o'clock, we're going to have Mark Lauren and Mike Locke of CoQuest. Mike was with us last week talking about how to become, how to take your business to the next level of just trading your own capital to taking outside investments. And that's what they do. They're very versed with working with CTAs. And so what they're going to be talking about today is what CTAs have been performing well. What sort of strategies are performing well? Is it trend followers? Is it a counter trend? All sorts of different strategies, discretionary, systematic. If you have any questions on CTAs, they're going to be talking about that, where investors are pouring money in, how the strategies have changed over the past decade, things of that nature. They're very versed, very, a lot of great information on that side of the world. So that's the schedule from that side. Larry will be popping on in and out. We're going to have, trades in the Opportunistic Trader trade blotter, throughout the day. We have a new month here. It's November 1st, so a lot of exciting stuff going on. It should be an active day. Any closing thoughts, Vince?
Just natural gas, because you mentioned energy, and I had given short shrift to natural gas. I like natural gas above 316 based on a volatility indicator, not a technical indicator. I know it's right underneath, if you're looking at, say, a weekly chart, a very long wick. If you're a technician, I'm not. I would be a buyer. I would be considering, again, this is not something, I don't trade counter trend. I don't buy dips. I don't sell rallies. I buy rallies and sell dips generally. The antithesis of how Larry trades. But I would consider, because I know the natural gas market behaviorally, buying natural gas on any dip above or close to 316, looking for a weekly breakout. That's something I would be holding for 4 or 5 days. What price do you see
natural gas is right now? What are you looking at?
I'm sorry?
What price I see decent natural gas at 327 right now.
Right, as do I. And I'm saying on a longer term, I'm working from outside to inside. On a longer term basis, okay, any pullback that touches the 316 area, so anywhere between 316 and 320, okay, I would look to be a buyer.
Okay.
Now, on a momentum basis, and I'm saying that as a person who will buy dips and sell rallies if he's familiar with the commodity. On a momentum basis, I'm actually not comfortable right now. I would say that for today, if the market does pierce 325 after the first hour, I would be scared to be long. How's that? I might be short. If I were Larry, I'd be short. I'm just scared to be long. That's how I look at things.
Well, I'll look forward to the 11 o'clock call with Bryn and Mike. They'll give a lot of great information there, and I'm very interested actually in their thoughts on natural gas right now, because it has popped on the radar as a interesting contract once again after kind of being really quiet for a while. We broke out through $3, and we've held this rally. I mean, we've been higher, but we've, I think, held in pretty well. So I'm interested in what Bryn says for the next, November, basically, for the month of November, the catalysts that are coming up and where she thinks things are going. So that will be 11 o'clock. She's always got great information there. Got a great schedule today. Like I said, Tom talking equities at 10, Bryn and Mike talking energy at 11, Dave Floyd technical analysis at noon, Mark Lauren at 1. So a lot of stuff going on today. Interesting November 1st. Thanks, everybody. We'll be back in the chat right now. If you have any questions throughout the day, any questions, put them in the chat. We'll get to them. All right. Thanks, Vince.
Quick shout out to Tom. Good morning, Tom. And although I take the opposite of every trade you take because you're basically generally a short volatility trader, I love the way you think.
That's the great part about the opportunistic trader. A lot of different traders giving different views. Maybe we'll have Vince give the speaking with Tom later on. That'll be good.
Oh, that would be great. I think our sense of well, you have to understand the sense of humor, I think, but it probably would be funny because everything he's buying, I'm selling. So, he's a Christmas tree ratio back spread guy, and I'm he plays direction with volatility at earnings, which is brilliant. I don't have the stomach for that sort of thing because I hate negative gamma. But he's got nerves of steel, I think.
All right, well, maybe that segment's coming up. It won't be today, but maybe next week. Tom and Vince just having a conversation about volatility. I think that would be pretty interesting. Maybe we'll do that next week.
Title it Tom is wrong. No, I'm kidding. Tom is wrong with Vince.
I don't see Tom typing, so I'm not sure if he's.
That's great. He's got a great sense of humor, and he's probably going to get back at me right away.
Oh yeah.
Vince is stupid because he's always long vol. With Tom. That will be his title for the show, I bet.
All right. Talk to you guys later. Thanks, Vince.